Gentlemen, good day and welcome to the Dodla Dairy Limited Q2FY26 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantee of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then zero on your touchtone phone. I now hand the conference over to Mr. Dodla Sunil Reddy, Managing Director of Dodla Dairy Limited. Thank you, and over to you, sir.
Thank you very much. Good morning and season's greetings to all the participants on behalf of Dodla Dairy Limited. I extend a warm welcome to everyone joining us on our call today. On this call, I am joined by my CEO, Mr. B.V.K. Reddy, CFO, Mr. Murali Mohan Raju, and SGA, our Investor Relation Advisors. I hope everyone had an opportunity to go through the financial results and investor presentation. This has been uploaded on the stock exchanges and our company website. We are happy to share that the acquisition of Osam was successfully completed by the end of July. The performance for this quarter reflects 2 months of contribution from newly acquired business. In the Q2 financial year 26, Dodla Dairy delivered a good consolidated performance with revenues reaching rupees 1,019 crores, 1,019 crores, and an EBITDA margin of 9.1% and a PAT margin of 6.4%. This is the second consecutive quarter where we have crossed the 1,000 crore revenue mark, despite a notable shift in the product mix as compared to Q2 FY25. In the previous year, bulk sales of S&P and butter amounted to rupees 165 crores for the quarter, where in Q2 FY26, this stood only at 28 crores. These bulk sales are strategic in nature in order to maintain a balance between demand and supply of liquid milk throughout the year and manage the seasonal fluctuations. On a like-to-like basis, our core business, excluding Osam Dairy as well as the bulk sales, delivered a revenue growth of 13% year-on-year basis in the quarter. During the quarter, we witnessed a robust volume growth in liquid milk sales, higher contribution of VAP products, excluding bulk sales, and rupees 52.6 crore sales contribution from the newly acquired Osam for 2 months, that is August and September. Collectively, all of these help offset the impact of reduction in bulk sales. As a result, we have achieved a healthy gross profit margin of 27.7% as against 25.5% in Q2 FY25. This margin improvement is despite the fact that Osam business typically generates a relatively low margins. Furthermore, EBITDA margins were impacted as we saw some uptakes in employee expenses, advertising and promotion, transport and stores and spares, which Murali will talk about in a bit. I would like to emphasize that the brand is at the core of our business and we continue to spend towards the same. Some of our recent brand building initiatives, including sponsorship in Kuku with Jati Nataralu in the Jio Hotstar, targeted OTT creative strategy, innovative weather reports in TV channels, and Ganesh festival sites. These are targeted initiatives to increase brand salience in our local markets. On the procurement front, due to the lean season and erratic rainfalls, the overall supply of milk remained under pressure, resulting in an increase in procurement prices. During the quarter, we also took some price hikes in line with the increased procurement costs. In Africa, our revenue recorded a healthy year-on-year growth of 21.7% with an EBITDA margin of 7.4%, higher than the Q2 of last year. As mentioned in the earlier calls, we are currently focused on capturing the markets in Kenya and hence strategically keeping our milk product price on the lower side. Over long term, we expect to see gradual improvement in the profitability in the Africa business. Coming to the Orga business, the business has delivered consistent high double-digit growth. The revenue for the quarter grew by 28.3% with an EBITDA margin of 13.7%. During the quarter, the raw material cost has increased as compared to Q1 FY26, resulting in a relatively low margin, but on a year-on-year basis, it is in line with the Q2 FY25. Going ahead to the GST benefits and festive demand, Dodla is well positioned to deliver consistent growth with further improvement in VAP contribution. We continue to work towards brand building, increasing procurement, expanding our product portfolio, and reaching newer markets. Before I hand over to BVK, I would like to take a moment to congratulate Murli and our finance team on winning the Best Digital Finance Team of the Year at the Next Gen CFO Awards of 2025, and also the overall Dodla team and the Osam team of HR Foods for being able to integrate our process and systems in a short time of 60 days, which I think is a great job done by the team. At Dodla, we are focused on creating best-in-class systems and processes under our C-suite leadership to take the business to the new heights. With this brief, I will now hand it over to the CEO of our company, Mr. BVK. Thank you very much. Over to you, BVK.
Thank you, sir. During the quarter, our milk procurement stood 19.5 lakh liters per day, which is an increase of 13.4% on a year-on-year basis. Due to efficiency improvement by Dodla as well as addition of Osam volumes. The average consolidated procurement cost in Q2FY26 was 37.29 per liter, which was around 34.64 per liter in the same period of last year. Our liquid milk sales delivered a volume growth of 12.6 year-on-year and stood at 13.1 lakh liters per day. Average consolidated milk sales price in Q2FY26 was 57.07 per liter, and Q2FY25 it was 54.82 per liter. The curd sales for the quarter stood 360 metric tons per day with a year-on-year volume growth of 11.2%. Now to give a clear picture of our performance excluding Osam numbers, I would like to share the volume details of excluding of Osam. Milk procurement volume stood 18.8 lakh liters per day. On a year-on-year basis, growth is 9.4%. Milk sales volume stood at 12.4 lakh liters per day. On a year-on-year basis, 6.3%. Curd sales volume stood at 346 metric tons per day. On a year-on-year basis, growth is 6.7%. These details are also available on slide number 7 on the investor presentation. Speaking of value-added products, there is a deep growth in terms of total VAP sales, mainly due to lack of bulk sales during the quarter, as explained by Mr. Sunil Reddy in opening remarks. However, there is an exceptional growth of 24% on year-on-year in VAP sales, excluding the bulk sales, which is a positive sign to look at. Bulk sales of SMP and butter stood at rupees 28 crores in the current quarter as against 167 crores of last year FY25. Hence, VAP sales contribution excluding the bulk sales stood at 27% in Q2 FY26 as against 22% of Q2 FY25. VAP sales in Osam stood rupees 14.8 crores, such as accelerated increase in the VAP sales as a result of our continuous efforts towards pushing the high margin VAP products along with the regular brand building activities. Additionally, we are progressing well with our Maharashtra expansion project. Once the facility starts getting operational, we plan to gradually increase our milk procurement from the state. In the initial few quarters, this milk will primarily be used for bulk sales until we strengthen our sales presence in the nearby regions and expand our geographic footprint for selling liquid milk and value-added products. Currently, in H1 FY26, we procured 2.4 lakh liters per day of milk from Maharashtra. Osam currently operates in approximately 2-3% EBITDA margin. Our focus is on enhancing operational efficiency and scaling volumes from the current 1.2 lakh liters per day to 2 lakh liters per day by FY27. We expect to bring Osam margins to Dodla consolidated level within 2-3 years through procurement, optimization, increased VAT contribution, and operational improvement. We expect Osam to play a strategic role, boosting both revenue and profitability while supporting our expansion to the northeastern region of India. Additionally, we implemented SAP at Osam effective from November 1st. In addition to these developments, Dodla, with its direct farmer net seller strategies, growing presence in Africa, steadily expanding our food business, remains confident of delivering accelerated growth while maintaining healthy profitability across all business segments in the long term. So now I would request our CFO, Mr. Murali Mohan Raju, to share the financial highlights of the quarter. Thank you.
Thank you, sir, and a very good afternoon to all the participants on the call. Talking about quarterly performance in Q2 FY26. Revenue from operations stood at 1,019 crores, a 2.1% year-on-year growth compared to 998 crores in Q2 FY25. We delivered a gross profit of 282 crores, with gross profit margins reaching at 27.7%, as against 25.5% in the same period last year. Employee expenses for the quarter increased by 25.7% to 50 crores, primarily due to 3.8 crores addition from Osam Dairy, regular annual increments, and the addition of new manpower with higher skills and qualifications, along with the infra addition. Other expenses rose by 18% to 139 crores compared to 118 crores in Q2 FY25, mainly on account of advertisement and promotional expenses, as well as increase in freight and overhead costs due to higher proportion of milk and VAP product sales instead of milk sales of butter and SMP, for bulk sale of butter and SMP. Advertisement and promotional spend is important for us in order to increase the brand salience for all Dodla products. Our EBITDA stood at 93 crores with an EBITDA margin of 9.1%. Depreciation expense came in at 21 crores as compared to 19 crores in Q2 FY25. Other income for the quarter increased by 18.9% to 11 crores compared to previous year. Net profit for the quarter stood at 66 crores with a margin of 6.4%. Now coming to H1 FY26 performance. Revenue from operations grew by 6.1% year-on-year to 2,026 crores compared to 1,909 crores. Gross profit improved to 542 crores, a 4.2% increase on year-on-year basis. EBITDA for half year stood at 175 crores, and the company reported a profit after tax of 129 crores with a PAT margin of 6.3%. In this period, we incurred capex of 77 crores, largely towards Maharashtra expansion. On the balance sheet front, we maintained a healthy cash and bank balances of 596 crores as of September 2025. Thank you. I'll hand over to Chorus.
We are open for questions
now. Answer session now?
Yes.
Hello?
Yeah, go ahead.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Lakshmi Narayan from Tunga Investments. Please go ahead.
Yeah, thank you. I just want to understand your milk procurement across the 4 states. What is the mix of milk procurement you get from these 4 states? That's my first question. The second question is that there has been a volume growth in milk. I mean, if you exclude Osam, I just want to understand what has been the volume growth and whether the volume growth in milk is coming by expansion in distribution, or how it has actually made possible, because you have reported a very good growth in the liquid milk consumption. And the third question, I just want to understand what is the mix of pouch curd versus the non-pouch curd mix, if you can give that. These are my 3 questions.
So I'll just answer the question on the milk growth and why it happened, sir, and Murli will give the specifics on procurement of the state-wise and pouch curd versus this and the milk growth volume. Predominantly, what we have been spending on our advertisement and also improving our distribution stance, we are seeing an uptake a little bit coming from our existing markets where our market share is also improving in terms of other customers or in the penetrating deeper. Also, we are expanding areas consistently. We still have a lot of areas to expand in the areas of Tamil Nadu. Karnataka, we have blanketed most of the areas for sale. Telangana, we still have some more penetration to do. So on the front of both of these, deepening our existing operations is where I think our sales percentage would be on 50-50 basis of the milk volume growth. Existing locations, volume penetration is coming down to 50%. New areas is giving us 50% of our volume growth. And brand is helped in the recall and customer presence. Murli now will give you the procurement and pouch curd and details.
So this milk growth, do you think this can be sustained over what period of time? And also, how much of these milk sales come from the shops, the modern trade versus the regular daily supplies?
So modern trade is still very minimal, sir. It's only hardly contribute that here, especially liquid milk and all will be much lower. It's only products that we push more towards modern sales. So all this comes only through the sales of the local, let's say the Kirana store / milk vendor who's coming and delivering it to you is the major area of growth still, sir. So that volume growth comes only from there.
Yeah. So coming to the state-wise procurement, overall the growth for the quarter is 8.21%. So in India, last year, this Q2 we have done 15.48 lakhs, as against current quarter we have done 16.75 lakh liters. So basically growth has come from AP 7.49, Karnataka 12.8, Tamil Nadu we are more or less mute, Telangana 19.86, Maharashtra 26%. That is the quarter growth. When you talk about 6 months growth also, 7.9 for AP, Karnataka 8.2, Tamil Nadu more or less mute, Telangana 3.7 and Maharashtra 21. This is with regard to the procurement. And with regard to the
procurement mix, sir, what is the procurement mix? Did you give that number, sir?
How much? What do you mean? Buffalo and the cow?
Yeah, both. Buffalo.
Yeah, okay, state-wise. Yes, okay, state-wise mix I'll give you. Yeah, I'll give you. State-wise mix, 32% comes from AP, Karnataka comes from 26%, Tamil Nadu 26%, Telangana 2%, and Maharashtra 14%.
Got it. And
come to the sales of Dodla Dairy, excluding Mosam Africa. Overall, we have grown in the volume 1.7%, but if you exclude the bulk, in the Dodla Dairy, we have grown by 5.6% for the quarter. When you talk about for the year, overall we have grown by 3.1% because in Q1, excluding bulk, there was a growth of only 1%, so which was averaged out. Curd pouch, majority is the pouch only, almost 80% is the pouch curd for us.
Pouch milk, 20% is curd and 80% is milk.
Yeah.
Okay. Thank you, sir. I'll come back and keep.
Thank you. The next question is from the line of Abhishek Mathur from Systematics. Please go ahead.
Yeah, hi sir. Thank you for the opportunity. Just wanted to check what is the milk procurement cost trend that we are seeing in October, and what is it that we are expecting in the near term going forward? If you can give the number also that we saw for the previous quarter, and what is it we are seeing for October and going forward, expectation for November, December, and what is the price hike that we took also?
Actually in third quarter, slightly the procurement cost is going up. Because, because of continuous rains, the procurement, it is not coming expected level. So because a lot of farmers have diverted towards agriculture, so the procurement what we expected in the month of October and November, 19.5 lakhs only, standalone itself. So it is slightly, it is behind the target level. So slightly there is a pressure in the procurement. So prices have slightly gone up. So already 1 rupee 50 paisa, price has already gone up.
But I think we're trying to compensate that with better product mix and improvement in overall consolidated numbers. So it won't impact our numbers as much.
And sir, in the VAP segment, X of bulk sales, we seem to have recorded quite strong 20% plus growth as you indicated in your commentary. Which are the products in VAP which are driving this growth? Which are the ones which are growing faster for us?
It's led by paneer and then by curd. Paneer.
Abhishek, the paneer curd.
Yeah. Got it, sir. And finally, sir, if we can give our outlook for the near term, what is our segment-wise growth outlook that we're expecting for the second half of this year? And do we think that we can do a margin of somewhere close to 10% in the second half, given that we are out of this seasonally difficult period? That's it from me.
So, Abhishek, I think when you look at it from a growth point of view, we will improve compared to the last quarters. We will maintain standalone India will continue to grow in the 6, 7 or 8% ranges of revenue growth that will come in. Africa is doing well for us. Africa will also improve on profitability because the seasonal changes have already come in. Procurement prices there are coming down. Orga feed will also continue to do well, and we are looking at Ossam's improvement happening much faster than what we anticipated, and we are confident that it will also do well for us. Outlook is that we will maintain that between that 8 to 10% kind of margin outlook also. It won't drop significantly. It will be between that 8 to 10. It's very difficult to take a call right now because we're still not too sure about the weather scenario, because the weather reports do state that El Niño is coming in. It is going to be a very bitter winter, so we are not sure about it. I think that is the reason. But otherwise, we will maintain between that 8 to 10%. We will always we'll be able to maintain margins there.
Sure, sir. And just one last quick follow-up to my first question. If you can give the second quarter procurement cost, the consolidated procurement cost number, and I think you've indicated that it is going up by 1 rupee in the third quarter. But if you can give the second quarter number, please. That's it.
So second number, Murli will give the specifics, but what happens in the third quarter, we will have an increase maybe marginally coming in from India, but it will also be compensated by reduction of prices in Africa. So that will be the consolidated impact. Will not be that much because Africa will improve for us, but Murli will give you the specifics on...
Yeah, consolidated number for this quarter is 37.29, Abhishek.
Got it, sir. That's it from me. Thank you.
Thank you. The next question is from the line of Aditya from Securities Investment Management. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. So first was what was the quantum of price hikes which we had taken? And sir, wanted to know the rationale of doing the same because I believe we would be one of the only few players who would have taken price hikes. So just wanted some understanding on that.
No, sir, the price hikes on the sales side or on the procurement side, sir?
Sales side.
The sales side is not much of price hikes that were taken, sir. Overall, because of the revenue mix that is there, the prices are looking at a higher in terms of the net realization that we've got, more than a price hike. There's been not much of price hikes. It is a price, the product mix that is the reason that is changed, which has shown an improvement of 4%. 4%, sorry.
4% because of the change in the product mix also is there. 4% was increase in the sales.
Understood. And sir, when was the last price hike taken by us in India, and are we looking to take any price hike in the near future?
Right now, there is no price hike, sir. Only internal slight corrections. No MRP price hikes.
The last price hikes taken were more 6 months ago. I think is when the last price hikes were taken, sir.
So recently for GST, whatever is necessary, that we have done it.
Yeah. Got it. So next was what was the revenue, gross profit and EBITDA for Osam in this quarter?
Osam, it's only what we have taken as 2 months, I think, but we will be able to give you numbers specific to...
Yeah. So revenue was 52.6 crores, EBITDA is 1.38 crores, that is 2.6% margin, and we have done a volume of 1.35 lakh liters per day. But when you consolidate as average, it has come as 89,000. Because 2 months operated, we are at 1.35 lakhs. Yeah.
Okay, understood. Now, sir, you have been operating Osam now for almost 2 to 3 months. So, any low-hanging fruits you think are present in the business which you could work on immediately to improve margins in the short term? And secondly, on a long-term basis, what kind of margins are you targeting over there? Over what time frame, and what would be the levers for doing the same?
So broadly speaking, it is a good market that we're looking at. We're taking it from the population point of view, the penetration that is being available, and the low-hanging fruits are, I think, we are trying to get the efficiencies of the operating systems, like we are doing what we are doing as our practices here to be implemented there, like we are doing in costing and other areas. Improvement in the facilities of the plant for qualitative improvement. It's very early now to give you specific numbers of growth, but we're very confident that the improvement will show in the coming few quarters itself on the bottom line on the profitability front. Volume growth is already growing on 20% year on year as per what the predictions of what their last year was to what the current year is. Like I told you, system integration successfully, we've been able to do the SAP integration, which is basically showing the ability of both the teams at Osam who's been able to adapt, as well as our team being able to integrate them with us very comfortably. Distributing and strengthening the network infrastructure is an ongoing process which will continue. System chain optimization is leveraging our existing networks by supplying condensed milk from Maharashtra when they have a shortage is one of the things that we are doing to increase it, in our own butter and SMP that we have here as our stocks to be sent there. So all these things added together will start showing an improvement, and we are hoping that it will do well for us in the coming few quarters.
Yes, sir. But sir, structurally, can Osam operate at India's standalone margins of 8 to 9%, considering the scale is lower over there?
We are actually targeting for that, sir, but it might take us some time to get there, because I think the immediate, those very low margins of this 1 to 2%, that will improve dramatically. But to make it a little higher after a point of time, we have to consider local conditions there, because with this number growth that we take, we'll be number 2 to the local cooperatives with Sudha, which will be existing, or Amul or whatever. I think based on the brand resilience and other such other things, we will be able to get it there, but it might take us 3 to 4 quarters or more to get there.
Understood. So just last one question. What was the curd sales amount in rupee terms this quarter?
For India, including Osam, or just standalone India, sir?
Total curd.
Total curd, okay.
Curd sales for India this quarter is 156 crores.
Okay. Okay, good.
194 crores in total, confirmed.
194.
Yeah.
Thank you, sir.
For the quarter.
Yeah. Okay.
Thank you. The next question is from the line of Shivam Mittal from Care PMS. Please go ahead.
Hello. Thank you, sir, for the opportunity. So, sir, in terms of value-added products, if I exclude bulk sales, so non-bulk sales has degrown sequentially. So, sequentially.
Bulk sales, the VAP sales have grown. Murli will give you the specifics of standalone India, the VAP sales growth.
So overall, excluding bulk, the growth was around 5.6%. In
VAP sales.
Only VAP sales. VAP sales was grown. Basically, VAP growth 7.7% is in the curd, and other products is almost 10%.
1 minute, so we'll just give you the exact VAP sales numbers that we are looking at.
Okay. Sir, you mentioned...
Excluding bulk, we have 24.2%, we have grown. VAP product 3.3%, excluding bulk.
Okay, sir. Sir, VAP sale excluding bulk sales, so Q1 versus Q2?
Yes. No, Q2 of FY25 versus Q2 of FY26.
Sir, you mentioned Osam...
Okay, I'll tell you.
We'll again answer.
I'll again answer it. So, for example,
yeah.
Q2, we have done a turnover of 230 crores in the Q2 of VAP. Last year, we have done, that means Q2 of last year, we have done 189 crores. That was resulting to 21.4% of the Growth.
Q2 to Q2, sir. Last year Q2 to current year.
Yeah, because Q1 when you compare it, last Q1 excluding bulk we have done 269 crores, but because that is a summer season, we have a more absence of curd, buttermilk and lassi. So when you compare with that, there is a degrowth of 29%. Yeah, and in the fat and fat product, because that we will see separately. In the fat, current quarter we have 31 crores. Last year, similar quarter, 22 crores. There is a growth of 44%. Last Q2 to this year Q2. And this year Q1 when you compare, because this year Q1 we done 24 crores. So there was a degrowth of 10%.
So overall Q2 has improved, sir. Q1 damage of not having the weather on our side was the one the VAT came down, but Q2 it has improved and grown.
Okay, sir. Understood. Sir, you mentioned OSAM is a low margin business. So any particular reason for that?
OSAM is BDK will answer the question.
Basically, see, there are two reasons. One is operational efficiency. A lot of operational inefficiency is there that we are correcting. And, see, systems and processes are not in place, So that's why within 60 days now we implemented SAP. So in a couple of months, there will be some change in margins.
So basically also what we mean by operational efficiencies, sir, dairy is such a business that on every end you'll have to make sure that everything is up to the peak in terms of quality of product, logistics, efficiencies in terms of logistics, temperature controls and all that. I think these basics which are more, touch and feel of the business that you need has been what we're getting to OSAM, and we hope to see that will immediately give you results in the short-term growth will be there.
All right, sir. Sir, for the quarter advertisement number, if you can specify.
1 minute, sir.
Quarter advertisement, we have spent. When we have spent in the quarter, this sum up was 10 crores, sir.
And what was the last year, same quarter?
Last year, similar quarter, we done only 7.2 crores.
7.2 crores.
Okay, sir. And how, sir, this GST benefit?
Thank you, Mr. Mitchell. I request you to rejoin the queue for follow-up as there are many participants left in the queue.
Okay, sir.
Thank you. I request each participant to ask 2 questions from now on. The next question is from the line of Manan Goyal from ICICI Securities. Please go ahead.
Hi, sir. Good morning. Sir, I can see in the PPT that the bulk sales for SMP and butter is 283 million in Q2 of 26, but it is 1,666 in Q2 of 25. Could you specify the reason for the same, why there is too much decay?
So basically, sir, this bulk, what we are trying to do is basically a balancing between our procurement and sale. I think strategically as we go forward, we want to, as the size of the company is growing, we cannot be precise about our procurement and sale volume. And therefore, we will have to build out more in terms of keeping this variation in how the seasonality will play. So keeping that in view, last year when the procurement prices were a little lower and there was an abundance of milk, we started to continue with procurement and we didn't want to concede procurement, and therefore we had a build-up of inventory which we did sell. So that is already shown as strategically benefiting us now. When the procurement volumes have come down overall, we are still able to maintain our surplus mode in terms of the additional 1 lakh liters which we need for our own balancing, and we are continuing to do it, is what will happen. So when there is a seasonality that comes in, we are not saying no to the farmers, we are continuing to increase our offtake and continuing to, if there is a surplus, we convert that into the inventory of powder and butter. So as we go, that is the reason why when the Maharashtra plant also comes into operation, we will start going and doing more of aggressive procurement and also keeping costs into consideration of which plant of conversion and where it moves, and maintaining inventory levels to see that it will benefit us if required, or we will have lower inventory, like how it is showing up between last year to the current year. So this is only a seasonal balancing that we are doing, and it will be there with us.
Understood, sir. Thank you.
Thank you. The next question is from the line of Praveen Kumar from Q2F Capital Advisors. Please go ahead.
Hi, good morning. Thanks for the opportunity. I had a couple of questions. The first one was on, this year has been beset by, volatility on the supply side in terms of high procurement prices and, they're refusing to come down due to, weather-related volatility. So I wanted to ask a couple of questions around that. One is that how do you deal with this, on an ongoing basis in terms of both the supply side and demand side volatility due to seasonal variations? And do we foresee, the last time we had a procurement and sales price kind of a mismatch, we had to, we ended up building some inventory and, taking a hit on the cash flows in FY24. So do we see a repeat, are we likely to see a repeat of that? That's question number one. Question number two was, I wanted to understand the breakup of the employee expenses and the other expenses. You have attributed it to a few factors, but I wanted to get a more detailed breakup of the expenses to understand where the increase has happened. Thank you.
Yeah. So I think, thank you, sir. I think Murli will give the specifics on the employee details. I will just take the thing on the bulk trade that you are looking at as saying, will it repeat? Current year, it will not repeat because of lack of low procurement, and not having enough of milk coming in the system. But going ahead for next year, again, we are not, to maintain a variation between the 20 days and 30 days of inventory to 5 or 10 days will be a variation that we will have to be prepared for. In terms of cash flow, it is not a significant increase. We have ample cash reserves and we are debt-free company. So that is not at all an issue. It is only done from our side for more a balancing of our procurement and sales. So for the current year, no. For the next year, we are still not sure. We have to wait and see how this happens. So this is the normal industry trend in the dairy sector. Last year was excessive procurement, lower price in procurement, which did show that inventory and what we sold. This year is less and it's not showing. Now, Murli will be able to give you the breakup of the salary details, sir.
Yeah. Overall, sir, for this quarter, actually, we have total 10 crores of increase was there. In the salary cost itself, around 10 crores. Majorly is one of the awesome addition is there, and apart from that, 12% of increment is there. Apart from that, regular headcount increase because of we have geared up for the volume today around 19 lakhs of procurement volume and sales volume. Because of the erratic rainfalls, all those things couldn't able to do. So the built up whatever we have done for the headcount, that was one of the reasons. Second is in the transport cost, almost 7 crores was increased because of the B2B sales was converted more into B2C. Apart from that, yeah.
So basically, I think increments were around 10-12%, sir. And the additional 6-7% has come because of OSAM and our increase in procurement and manpower for Maharashtra project that we put together.
So to understand that in more detail, you are saying that the headcount increase part of it is more towards the procurement and not necessarily towards pushing your value-added products, etc., right? Just to
basically, we have procurement and sales also a little bit is there, but we are trying to put this whole growth plan together for increment from our standalone in India to reach 20 lakh liters, and that cannot be done instantly. So we're building the team out for that in the future.
And also advertisement, we goes extra. Yeah.
Understood. Okay. Thank you. Thanks for the response.
Thank you. The next question is from the line of Hitendra Pradhan from Maximal Capital. Please go ahead.
Hi, sir. I hope I'm audible. My first question is regarding the supply side, the procurement trends. So, sir, you highlighted that, there has been supply pressure this year. So if you can just elaborate on, how the procurement price growth was in, say, 2025, 2024, and how that situation has changed this year, and what are the factors contributing to it, and also H1 versus H2 seasonality in terms of the supply, in terms of the flush that you were mentioning on one of your slides. What to expect? October hasn't been good, but from next month onwards, what are your expectations, and when do you see the supply situation improving?
The procurement, as expected, it has not come because of excessive rains, especially in southern India. Not only southern India, entire India. Even in northern India also, so far, normally, after Diwali, the procurement goes up. Prices will come down. But, as of now, that we have not seen any impact. Now, the information what we are getting, the procurement level is not comparatively expected level as compared to last year. So because of that, slightly prices are slightly firming up. That is the main reason.
And the trend also will be the same, sir. Because
also coming months, look like it will be the same.
Murli will give you the specific numbers of the previous years too.
Yeah, last year, basically it is 34.86 was the price. Now we are at 37.47.
As a per liter price.
Per liter prices for India. Yeah.
So, but
As a consolidated, it is 37.29.
Sorry, sir. So what are the factors that have contributed to this? Like, this year, what has changed? Only because of...
The effect is more because when you have unseasonal rains. So summer anyhow, we don't get much of milk, and when the weather improves, the animals will be able to yield better. But when you say that there's excessive rain, there is no disease, malnutrition, and all that comes from the animal side. On the farmer side, when there is rainfall which is more, the attention towards growing of his crop becomes more and less care towards the animal husbandry side, because he likes to look at his revenue from saying that my animal husbandry side is doing better. Sorry, there is no getting revenue from my crop, and concentration there is more. When there is a little less of rainfall, also it's the same thing that they'll have to take care of the animals more than the agriculture, because there's no agriculture and then the milk improves. So when there is abundant also, it is a problem which is there, which has come this year. So that is a basic reason. If it was optimal, then it would have been great. The animals would have been producing more as usual. So it is abundant of rain having the health impact on the animals and concentration more on the farming.
Got it. Sir, the second question is related to the EBITDA contribution from your milk sales versus the VAP sales. So you do like somewhere around 90 to 100 CR per quarter. So how much EBITDA you generate from your milk sales, and how much EBITDA you...
Milk would normally be lower, sir, and that will be a little higher. I think Murli will give you the number.
Milk average EBITDA contribution is around 9.23 and VAP is around 11.91.
Consolidated.
11.91 is little understated. So what is your mix, sir? Like paneer and curd are your high selling products. So
curd will normally be our most high selling product in the VAP, sir, followed by others. So curd will be, Murli will give you the specific of how much is curd and how much is others.
Curd is contributed around sale of 155 crores in this quarter, and paneer is around 10 crores. So we have curd margins around 15%. Paneer is around 6 to 7% of. Now it is picking up.
Can you come again? Paneer was 60?
Paneer is actually lower margin of 6 to 7% because we're pushing it into modern trade and online. So we are doing a lot of promos which we attribute to that cause. Otherwise, that will also improve to the 10-12% margins in the days to come.
Got it. And the mix changes from H1 to H2 depending on the seasons, or does
normally H1 is always better performing, but this year unfortunately it was not there because in terms of rains and coming in, lassi, buttermilk, which are other high volume products, don't sell. Murli will give you the difference between H1 and H2.
H1 and H2 generally, H1 will be higher, H2 we don't have. H2 we are expecting that it will be the similar
lines of last year.
Yeah, but the curd, both products get impacted due to this, between H1 and H2, curd and paneer, or curd and paneer is more steadier and all that?
Okay, paneer will be on the growth trajectory because that is not that much weather related. It's more a market push that we give. Curd is more weather related in terms of the south of India. If it becomes too much of a winter, people might cut down the consumption or increase. H1 is summers are higher. We have more of curd and buttermilk consumption. H2 in winters, it maintains the status quo. It won't increase rapidly. But it also, as I said, it depends on weather. For us, surprisingly, right now, October, the past 4 or 5 days have been warm compared to what we are expecting. So I think, but it will maintain the same numbers of volumes. Marginal growth will be there because of more penetration instead of having a substantial growth.
Okay, sir. That's all from my side, sir. Thank you.
Thank you. I request each participant to ask 2 questions only. The next question is from the line of Kairav Sundar from Spark Capital. Please go ahead.
Yeah. Hi, sir. Good afternoon. Just want to check on the Orgafeed business. I see there's a moderation in margins from 17% to 13%. What contributed to that?
Basically, Orgafeed will be predominantly driven by the commodity of maize and prices of maize. I think that would have contributed the most. Murali will give you the...
Basically, the quantity was increased. Earlier we are doing 4,110. Now we are doing around 4,600. So
tons per month.
Per month. Which was actually 37% of growth in the value, and revenue also increased by 28% because the margins is increased because of the 6% was the price decrease
in maize.
Yeah, correct. That is the reason. Mainly because of the value, and the other reason is the changes in the price.
Okay. Sure, sir. Thank you. I'll get back into the queue.
Next question, ma'am.
Excuse me?
Thank you. Thank you. The next question is from the line of Mohit Dodeja from MK Global. Please go ahead.
Yeah, hi sir. Sorry I joined a little late. Just wanted to ask one question that how these recent GST changes are likely to help our value-added portfolio?
GST changes, basically we have reduced the price, and looking at it, will the consumption offtake be significantly larger? I don't think so. It will be moderate improvement. The example I give is nobody is going to be consuming extra in terms of the major product of ghee, because whatever is standard consumption at the household level will continue to be the same. But I think it improves because of other products like flavored milk and which have more of a one-off kind of a consumption products. Yes, there will be a little uptake because it will be more competitive with the other refreshments or beverages that are there. But unfortunately for us, I think we'll have to wait and see this impact coming more in the next summer and current winter seasons.
Okay, so how much are we trying on formalization? The north market is informal, so are we trying to push products in that region?
Not for us is significantly only Bihar and Jharkhand, where there is still a significant amount of informal and formal battle that goes on, which gives us a lot more scope to improve. Because the formalization won't be dramatic in nature, but like how it was in the rest of the country maybe a decade or decade and a half ago, is where we will be looking at the formalization happening and improvement going further in the northern markets of Bihar and Jharkhand. It is also related to GDP and the overall infrastructure improvement. We are very confident that that will happen, because looking at other sectors, they've been doing extremely well in these markets and growing very fast, and we also are confident that we will be able to do the same.
Okay. Thanks.
Thank you. The next question is from the line of Resham Mehta from Green Edge Wealth. Please go ahead.
Yeah, thank you for the opportunity. I just have a couple of data questions. So, for FY25, what would be our revenues from B2B?
B2B for us is a very small segment, ma'am. We hardly have. B2B is only the bulk trade that we did in terms of our bulk volume. So I'll just get you that number.
Yeah, bulk sales basically last year, for the full year, we have done total SMP. Probably we have done 202 crores of butter and SMP of 110. So that's resulting into total value of, that's it. 312 crores.
For last year.
So this is at a consolidated level, right?
Okay, yeah, consolidated. And current year it is only 86 crores.
For the half year.
Half year. Because first quarter we done 57.7 crores, Q2 we done 28.3 crores.
So this is console, ma'am. Bulk is only in console. Other areas we don't do bulk at all. It's all B2C.
Right. And in terms of what is your revenue mix for from different channels for FY25? Like how much would be through the traditional milkman/kirana route? How much through e-com, quick com?
So for us, broadly, e-com, quick com is lower. Murali will give you the specifics, ma'am. We have what we call as agents. We have our own retail parlors, distributors, and others. Murali will give you the specifics.
Yeah, distributor is 49%, agents is 22%, DRPs, our own retail parlors, is 17%, and another hybrid DRC where they will do 2%. Mainly institutional is 1.8. Our modern trade is only 4.1%, including e-commerce, and super stock is 2.6%.
Sorry, can you go a little slow?
Sorry, yeah.
The milk distributors is 49 plus 22, right? Our own retail parlors is 19 plus somewhere around 2, as you said.
Yeah.
Right?
Yes.
And institutional is
1.8.
And modern trade is 4.8 and e-com
4.1. Super stockist. So it's a bigger distributor model, you can say that.
Added to the distributor model.
Yeah, 2.6. Yes.
Super stockist is 2.6. And then how about e-com, quick com?
E-com quick com is a part of 4.8. It will be very small. It will hardly be 0.5%.
Okay. And what would be our revenues from different states in FY25? If you could just give the percentage terms, and also what would be our procurement from different states for FY25 and percentage terms?
So FY25 procurement, I think, will give you state-wise and go ahead, Murli.
State-wise procurement, madam, AP is 32%, Karnataka is 26%, Tamil Nadu is 26%, Telangana 2%, Maharashtra 14%. And state-wise,
that's procurement.
That is procurement, madam. Sales-wise,
FY25, right? Annualized number you're giving, right?
Yeah, yes, annualized number.
Right. And
so,
for the revenue?
Sales, ma'am, 31% from AP, Karnataka 37%, Tamil Nadu 19%, Telangana 13%. It is for Q2.
No, I want for...
We are excluding bulk.
FY25 full year, ma'am, or for Q2, ma'am?
No, for full year.
Yeah.
Full year, it will be minor change will be there, madam. That's it.
Almost the same proportion, ma'am. I'll get you the numbers later, but it will be almost the same proportion, ma'am.
Got it. And the procurement numbers also that you mentioned were for full year FY25, right? Across states?
Full year FY25. No, that was also for the quarter.
Procurement I given full year.
Full year, yes.
So on specifics of only quarter also? Yeah, that is.
No. That's full year. And Maharashtra, we don't have any revenue?
No sales there yet, ma'am. No revenue.
Okay, and just lastly, I think a clarification. You mentioned that the standalone India numbers are expected to grow at 5-6%. Did I hear that right?
Yes, ma'am.
For H2?
Milk and milk products. Because go ahead and come again, ma'am.
And why would it be such a low number that we are expecting? 5-6% India standalone?
The revenue volumes, because again they're entering into the winter seasons where the value-added product numbers will come down normally, and that is what we're looking at now.
All right. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Kiran from Green Investors. Please go ahead.
Hello. Good morning. Thanks for the opportunity. I hope I am audible.
Yes, sir.
Please continue.
Yeah, the first question I would like to ask is EBITDA margin for curd and paneer for Indian standalone operations.
Yeah. Murli will just give you the EBITDA margins for curd.
Curd, I think we just told you it is 15.29%. Paneer is around 6 to 7%, but we are hoping that will increase going forward because now we are in the stage of capturing the market and more we are penetrating into the modern trade and e-commerce. That is the reason the margins are little lower.
So coming to the next question, I would like to ask for private milk GST refund we had, I think for FY21-22. Can you give a clarification regarding that?
Yeah.
GST refund was basically, there was a industry as a whole, the flavored milk, there was a debate on which category GST should be classified under. So later, I think the industry and most of the independent dairies went to the respective courts, and courts gave favorable order that the department was classifying under the
5% category earlier instead of
12% category, and gave us the relief, and that's where the advantages came.
So we have received the refund in this current quarter?
Yeah, this quarter we have not received it. We are yet to receive another one. Only Karnataka is pending, which we are expecting around 1 crore will come in the subsequent quarters once we won the case.
So
all other quarters are already captured. Yeah, we already got. It was factored in the earlier quarters, not in the Q2.
So it was captured in Q1?
Yeah, Q1.
So in P&L, where is it hitting? Just to know.
It is in the rates and taxes.
Okay, on rates and taxes, P&L. Thanks for the information. I will back on that. Thank you.
Sure.
Thank you. The next question is from the line of Madhav from SKP Securities. Please go ahead.
Yes, hi. Thank you for the opportunity. So my question was more on industry standpoint. So I wanted to know like what are the dynamics, like demand supply dynamics. I know you have answered that like in the current quarter you witnessed that there was a surge in procurement prices because of unfavorable weather and all these things. But fundamentally, what are your views? Like, is it that the demand for dairy products is rising, so the demand for milk is rising at a higher pace than supply, or the supply increase is higher? So fundamentally, what is your take on this? And secondly, is there state-wise very big divergence? On this. If you can
no big divergence state-wise, sir. And the basic broad picture is milk is what we call as B2C, which you can look at it as the consumer products like milk, paneer, all the other products. Then there is a whole segment of what we call as the ingredient space, which is basics are powder and fat that you look at. The ingredients can go into a host of industries, right from we have variants like casein and such things which can go from pharmaceutical to biscuit factories to other food products. So the balance of what we have is, like you said, rightly supply demand of what we produce locally. If there is a shortage in these production inventories of the other ingredients, sort of prices go up, and the ingredient business needs more volume, then they increase the procurement prices. Once there is a surplus in procurement, when there is the ingredient is under pressure because they're building up too much of stock, procurement prices then come down. We being majority B2C business, we're able to keep that status quo of profitability and go forward. Sometimes we do have a lag. We're not too sure of how much the procurement prices will go up if there is a shortage, and by when it will be stabilizing. And the passing on prices will take that effort of time, and that year we'll see a slight dip. Whereas the procurement prices drop, then we don't normally reduce the selling prices, and that comes into our bottom end quicker. That is broadly the way the scenario works. Not much of a divergence. The predominant growth is coming from Indian consumers consuming, increasing what we call as the per capita consumption. As more people are becoming health and aware, being the new protein or looking at it as from a healthier point of view, consumption is increasing. I think we see 4 to 5% growth in terms of basic market size increasing, and the procurement is also keeping up in tandem.
Okay, so in a normal scenario, so can we assume at what rate you believe the milk procurement prices for you can we expect to increase or decrease or whatever, or remain stable in a normal scenario for in medium to long term, let's say medium term?
Long term, sir, if you look at it as a 30-year long-term cycle since we have been in business, I think inflationary milk has been growing at around a 10% inflation on both procurement and sales over a 30-year period. I'm not looking at it as that short term of 2 to 3 years. 2 to 3 years, you will have the 4-5% inflationary pressure, which comes both from procurement and sales. It's only the timing of when the companies pass on or how do you take it forward. So also the difference is coming is the multiple channels are changing. So that is also another reason we will see more, I think, inflationary pressures coming because for the convenience, customers are willing to pay more. So the costs are going to increase on the sales front.
Okay, understood. And just one last question. So on